Hey traders, it's June 22nd, 2021. What I want to do right now is run through a few symbols and some recent trades and the performance of the stacked RSI trading strategy that we follow. And the stacked RSI trading strategy is something we follow in our group mentoring. So every week we meet and talk about that strategy and other strategies and the current symbols that are doing well with that strategy and have done well over the past year or so and are continuing to do well. And it's also the strategy that I teach in the Automated Trading Accelerator if you want to fully automate that in your trading. So I'm just going to show a few examples here. So here's Ally. And the way Ally has traded was there was some consolidation and whipsaw and a lot of entries and exits, but what we're aiming for, what we're looking for with a good trend following and momentum following strategy is that nice long hold. And we just had that recently. So we had the run from 22 all the way up to 50. And then with Ally, it's actually now at a full exit. So totally flat on that trade, looking to re-enter. And what I love about the re-entry in that is you have the opportunity when you have a big win like that, two ways to handle that. Either just keep trading the same size, so you're actually able to take money off the table and now trade back at the original size on your next trade, or you can actually go in there and change your size and get into a little bit larger size, reinvesting that profit. So the first that I shared, where you just trade the same size every time, is a way to redistribute. So you just take that excess gain, you can now add another symbol to your portfolio, you can add size to the things, you can put it in savings, there's a lot of things, just leave it in cash, whatever you want to do with that. That's the conservative route for those who are just looking for steadiness and growth, and just allowing everything to, when it grows, redistribute the gains and just assume that big gains are random. They're somewhat random, and allow those to happen, but then move that money around and redistribute. Okay, so that's the way for smoothness. Now, if you are willing to sacrifice a little smoothness for the potential of rapid gains, more rapid gains, or much larger gains that occur with symbols like Tesla, with symbols like Amazon years ago now, which doesn't do it anymore, but it did for a long time, where if you continue to reinvest half or all of the gains into those, you can have tremendous returns that started out with a small allocation and then compound into enormous returns. So you'll have less smoothness because they're going to have higher volatility from being so concentrated, but that can happen. All right, my choice is that I choose to do about 50-50 on symbols that I really believe in because of fundamental reasons or business reasons or economic trends or anything like that. I'll put more behind those as they prove themselves and make money, but more often than not, I am going to take some off and not just continue to reinvest everything. All right, so that's Ally, probably another minute longer than needed on that one. Amrk, this is one where why I love automating so much. You got to deal with this choppiness and you're waiting for the trend to develop, but when it does, you can capture it. And this is very hard to navigate if you're trying to figure out what to do on this gap and this gap and this gap. But if you were back here in the consolidation when it first started building strength, you don't have to think about it. You're just waiting for the trend to roll over. And this symbol right here is still in some size, following along the trend. That's what the stacked RSI does very well. Leaves a remainder on to follow for as long as it wants to go. So if it rolls over and it kind of corrects hard, you have a smaller amount of size left in that final correction. Or if it's going to continue to run, then you have that remaining position on for that. So right now there's just a little bit left in there. And if you haven't been able to tell you, I'm just kind of going alphabetically through our list because they're all great examples. They really are. But I will stop here after a couple minutes when we've kind of made some good examples for today. All right, so ArcBest here, another one where I love to look back. It's one thing to look at the big win, but I think what makes this most educational for you, most valuable for you, is you've got to go also look at the other side of the coin. So I could say, hey, look at this big move from 35 to 80 and we caught it. Great. Here's the other part of that. Go look at this back here how we had to navigate it to get into that. All right, so what happened is we were coming out of a strong trend. It was correcting. We are flat. We're out of our position here. You can see this is the equity curve indicator, goes flat. The open equity and the closed equity join together. That means there's no position, there's no floating P&L. We get back in, we have a little whipsaw. We get back in, we capture a very tiny gain, we go flat again. You know, so that's what we have to deal with. Is this going to roll back down to the low 20s? Is it going to just go sideways and we catch a little whipsaw and maybe some small gains and then have to defensively get out again? We have to go through these little cycles in here, and we don't want to overthink trying to like filter out little periods of time like this. Just be involved. Just participate. Just follow the plan. Follow the rule. Okay? Follow the rules. And then we get back into here. We don't know what this is going to do. It could be a whipsaw. It could be a small gain and get back out. What happens? It runs. Okay? It runs up to 40s. All right? And then what happens? Well, we take a little bit of position off. Stacked RSI has 3 exits. So the second one exits here as we could roll over, and then the final one holds all the way up to here. And at this point, now we are flat. So that's how you can follow something from the mid 30s all the way up into 90, eventually getting out around 80 or just under 80, and not stress out about it because you have a plan to lock in some gains, let the rest run, and be out when it finally collapses all the way back into the low 50s. And there's no predicting or guessing or anticipating any of this. It's just following the right stocks with the right plan, with a good strategy for confirmation on entries, multiple exits to have good capital management, and all of those things included in that. So we'll do one more here. This actually finished up the A's on my shortest list of symbols to follow. And so this is one that's in that more of a sideways. What do we say by sideways? Well, if you just look to the left and you can see that a month or two ago we were touching the same price. Maybe that was a high then and now it's in the middle here. It doesn't matter. Sideways just means we've seen this price several times over the last several months. Okay? Trending means when you're here, you look back and say, I don't see where we've ever been there, you know, or at least anywhere visible. So this is trending, turning sideways, and that's fine. It doesn't mean because it's sideways now, that's all it's ever going to do is be sideways. So what we're going to do is capture and be a part of the next run. Sorry, it keeps scaling back there. So this is our last trade on AVNW, Aviat Networks, is a resurgence of strength here with one exit there, second exit, third exit, now out. All right, so that's one where it's just a sideways market that is, we're capturing some little momentum that's running through there. All right, so this is all on the daily chart. I also run half-day charts and hourly charts on many of these symbols too. So hope this was helpful for you. We just looked at 4 quick symbols. We're looking at a market where generally the entire market is sideways, but there are still big moves happening and there are still profits to be gathered from that. And if you're trading cryptocurrency, might as well just throw one more example out there. All right, here's our example. All right, the Grayscale has been struggling for quite a while now, but navigating this run, you can be in from the 12 to the 40s, and then as it goes from 40s back into the 20s, no position, we're flat. All right, having the right plan, scaling in, scaling out, using confirmation, using trend and momentum, using rule-based strategies, using automation to be fully diversified. And ultimately what we're aiming to do is skip dips and ride the runs. Okay, ride the big moves, be out on the crashes, don't try to catch the bottom or catch the knife. All right, that's what we're trying to accomplish and doing quite well with it. So 2 ways for you to participate in this if you are not. Every Wednesday we meet and talk about symbols, strategies, and techniques for following the markets and being profitable and controlling risk. So you can join with membership to be a part of that meeting every Wednesday. Or if you want to dive deep, work one-on-one with me, create a portfolio of fully automated trading systems that follow these strategies on a large portfolio of symbols for the smoothest and best returns, then you can join in the Automated Trading Accelerator. And then in a few short weeks, we can have you up and running with full automation and have plenty of time with just you and me working one-on-one. So either way, I hope you take the opportunity to invest into working with me and our group. I do think it'll be a wise decision for you if you are looking for edge in the markets. All right, so thanks for checking this out, and I'll give you another update here in the near future. But for now, that's all, and we'll chat again later.